SpaceX just filed for the biggest IPO in history, okay? We're talking about raising up to $75 billion in a single day. But here's the thing. Most people watching financial news don't even know what an IPO is or why a company worth $1.75 trillion even needs to raise money. Stick with me because by the end of this video, you're going to understand exactly what's happening and how to think about it. This is part one of a two-part series. Part two, where I break down the full space boom investment thesis, will be after this, but you need to watch this one first, okay? So let's get into it. What is an IPO? An IPO stands for Initial Public Offering. That word initial is everything. It means the first time its company sells its shares to the public, and it only happens once. Here's the thing most people miss, okay? When you go on Robinhood or Fidelity and buy a stock and that stock goes up $100, the company gets $0 of that. Zero. The money is going to whoever sold you that share, another investor. The company only made money when they initially sold those shares. All right, think about it this way. Apple went public in 1980. Every time you buy Apple stock today, Apple sees none of that. That money went from your account to the person who sold you the shares, okay? The company cashed out in 1980. Let me give you a simplest possible example of how this works, because this is literally what SpaceX is doing, just with a few more zeros. You own a bakery. You're doing $50,000 a year in revenue. You find out that if you buy a $150,000 commercial oven, you can produce 8x the output and make $400,000 a year. The problem, you don't have the $150,000 sitting around, and you don't want to take on debt because you'll be paying interest for years, right? You don't want too much debt. So here's what you do. You sell half your bakery to raise the money. So a local investor in the community looks at the numbers, sees that with the new oven, your bakery will be worth $300,000 and agrees to pay $150,000 for a 50% stake. You get your $150K, you buy your oven, and now you own 50% of a business doing $400,000 a year instead of 100% of one doing $50,000 a year. That's the trade. You gave up half, but you multiplied the value. That's an IPO, guys. Starlink is doing the exact same thing, except instead of a $150,000 oven, they need $75 billion to fund Starship, Starlink expansion, Terafab, or that they came out with the other day, the new factory there, and eventually getting humans to Mars, building things on the moon, okay? So why do companies do IPOs, okay? Companies go public for a few reasons. Number one is capital, access to massive amounts of cash they can't get from private investors alone. SpaceX has already raised about $10 billion in private funding over 30 rounds, but $75 billion, that only happens in public markets, okay? Number two is liquidity for early investors. Think about Peter Thiel's Founders Fund. They put in $20 million back in 2008 when SpaceX was almost bankrupt. When this thing goes public at 1.75 trillion or so, that early bet becomes worth billions of dollars. The IPO is how they cash out. And number three, though companies won't always say this, is credibility, right? A public listing forces financial transparency, puts the company under analyst scrutiny, and signals to the world that you're the real deal. So before you get hyped up and you think you should just buy SpaceX on IPO day, let me show you what happened to the two most hyped IPOs that I remember. Meta, back when it was called Facebook, went public in May 2012 at $38 a share, valuing the company at $104 billion. The hype was insane, guys. Biggest tech IPO in history at the time. And then the stock dropped and kept dropping. It fell more than 50% to about $18 a share within months. So people who bought on IPO day were underwater for over a year. The company was fine. Business was growing, but the hype had priced it too high at launch, okay? Coinbase is another example. April 21, reference price was 250, right? That's what they came out at. And it opened at 381, right? So right there at the open, almost, 50, 60% gainer. Hit 429 on day one. It was insane energy. I mean, I remember this day. I was in Fall River at the cigar bar, actually. And then it crashed. By January 23, almost 2 years later, Coinbase was trading at $31 from $429 to $31, right? So if you had bought on day one at 381, you're sitting on a 92% loss at the bottom, right? So both of these companies eventually came back and then some. Meta's now worth trillions. It's in the Mag 7. Coinbase hit a new all-time high of 444 last year. But the lesson is IPO day is not always the best entry point. The hype machine is real, and it often prices in years of growth on day one. So I'll talk more about my personal SpaceX strategy in part 2. But spoiler, I'm watching a 6-month lockup expiration very carefully, okay? So now who is SpaceX and what do they do, okay? So if you don't know about SpaceX, okay, let's break it down a little bit. So this isn't just any company going public, okay? In 2002, Elon Musk sold PayPal to eBay. He walked away with about $180 million and immediately took $100 million of that and invested into a rocket company. Okay, he tried to buy Russian ICBMs to send a greenhouse to Mars. They laughed him out of the room. So in typical Elon fashion, he decided to build his own rockets, and that's what he did. Now, let's keep it 100, guys. The early years almost killed him. Okay, the first 3 Falcon 1 launches all failed. SpaceX was nearly bankrupt. Tesla, which he had bought around that time, also was nearly bankrupt. Musk was losing sleep, literally waking up screaming for nightmares. Then in September 2008, on the 4th launch attempt, Falcon 1 reached orbit. First privately funded liquid-fueled rocket in history to do it. NASA handed them a $1.6 billion contract 3 months later, and they were saved, okay? From there, the milestones stacked up fast. 2012, first private company to dock with the International Space Station. 2015, first propulsive landing of an orbitable rocket. 2020, first private company to send humans to the ISS. 2021, first all-civilian orbitable crew. And now Starship, the most powerful rocket ever built, is being caught out of the air by a mechanical tower. The private valuation started at essentially zero in 2002. By 2015, if you don't know this, guys, Google and Fidelity invested $1 billion, and they valued the company at $12 billion. By mid-25, that number was $400 billion. Now they're targeting $1.75 trillion, and Bloomberg says they're actually floating $2 trillion to prospective investors. Okay, so if you own Google stock, you actually own a little bit of SpaceX, also with Tesla as well. All right, so what are they trying to do with the money? SpaceX confidentially filed with the SEC on April 1st, 2026. They've lined up 21 banks: Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, Citigroup. They're the lead book runners. The IPO is internally codenamed Project Apex. They're targeting a listing as soon as June of this year, 2026. The $75 billion will go towards Starlink expansion, currently at 9.2 million subscribers across 150 countries, generating about $16 billion a year in revenue. Starship development and the integration of XAI, plus the new chip factory they announced that's a joint venture with them and Tesla. Okay, the major investors who got in early, yes, they're going to make historic returns. That's how it works, right? Get in early, get in hard, you ride it up. Unfortunately, retail doesn't have access at that level. Hopefully that'll change in the future, okay? Founders Fund put in $20 million in 2008. Fidelity's been in since 2015. Google has about a 7% stake. Elon Musk owns roughly 42% of the equity and controls 79% of the voting power through super voting shares. That structure isn't going away when this goes public. And here's the thing they announced that almost no other IPO has done, and this is the big part. They're allocating 30% of shares to retail investors. Normal people, the typical IPO gives retail 10%. SpaceX is saying regular folks will get 3 times the normal access. All right, guys? That's the foundation, guys. You know what an IPO is, why companies do them, why the stock going up doesn't make the company any more money after day one, and what SpaceX is actually building toward. In part 2, I'll get into the full space boom thesis, all right, why I think this is an industry that's racing towards $3 trillion a year, the railroad parallel that every investor needs to hear, and my personal take on whether you should buy SpaceX an IPO day or wait, whether you should sell your Tesla to buy SpaceX, and what my plan is for the IPO. All right, guys, I'll see you soon in part 2. Thanks.